Hey, Melissa, how are you?
I'm doing well, Jasmine. How about you?
I am doing good. Coffee Talk Tuesday, but I'm drinking tea because I already had my coffee earlier.
I had 2 cups of coffee earlier, so I'm on to water.
Wow. I was thinking this should be a coffee, but let's just whatever. Let's see
Go
how
with the
far we get.
flow. Yeah.
Yeah. Um, so really quick introduction to anyone watching Coffee Talk Tuesday. This is Melissa with Bay Equity, and she'll go ahead and tell you guys a little bit about herself first.
Hi, guys. So my name is Melissa Vasilev, and I work with Bay Equity Home Loans, and I am a senior mortgage loan officer there. Background goes back 31 years ago to where I started as a receptionist and worked as a processor for about 8 or 9 years and went into underwriting for a little bit of time and made a decision to go ahead and become an originator so I could have a little bit more one-on-one with the client and have a little bit more control over the file. So I've been doing that since year 2001 and really enjoy this aspect of it.
That's a long time to be in the industry.
It's a long time, but you know what? Something you're passionate about and that you're good at. It's one of those things that I just truly enjoy getting people into homes. It's a big deal for a lot of families.
Yes, absolutely. And I mean, just my experience with working with you, I can see that it's something you really care about. So, um, so let's dive right into it. I really wanted to speak to you today because there's so many things changing right now with everything going on. And so, my first question to you is there's so much trending in the news economically and then on the lending side also. So, can you kind of give us a quick lending update, lending news update? I know there were Fed cut rates in the last couple of weeks, and then there's like larger banks like Chase doing, you know, different types of qualifications have kind of changed for them. So can you kind of touch up on those things?
Absolutely. So the overall market status has been that it's a little bit volatile. Is a good word for it. There's a lot of changes that have occurred. I'm going to say more within the last week than over the last month. But the entire COVID-19 has been bringing it to the point where a lot of things are being restructured. As you mentioned, Chase Bank is one of them that you've heard of. So what we're seeing is we had not too long ago, a little over a month ago, we had rates that were absolutely gorgeous. They were the lowest I've seen them in a very long time, if not some of the lowest I was able to lock some clients in on. It lasted for about 11 days, Jasmine. It was this nice level. If you got there and you got it locked, you're in a really good position. There were so many locks, in fact, during that period that it has brought a little bit of change into the industry because all the lenders nationally ended up getting to this point where they became at max capacity. Just meaning that so many files influx into the system, you only had so many bodies to work through those, and those locks are on a lock period, right? So you have to get them done within a certain period of time. Not only did that happen, it got coupled in by our stay-at-home orders. Mm-hmm. So now you have all these corporations or lenders, such as myself, which is an independent mortgage, but all of us are trying to work from home. So between the two of those, this influx of files, getting them through the pipeline has also left the rates pretty stagnant because the lenders aren't at the point where they need to entice more business because they're still getting through the pipeline of what occurred. So with that non-enticement happening at this point, along with when the stock market crashed right about the same time that the Fed did their rate cut,
Mm-hmm.
The mortgage-backed security people backed out of the market. They sold off everything. And we had days and days of these mortgage-backed security sell-offs. A nice acronym for it is MBSs. So you'll often see reports on the MBSs, these mortgage-backed securities. But when they sold everything off, it left the servicers in a predicament, because the servicers, which are the people you make a payment to, right? They're the ones that are taking your payment. They're now at this position where they still have to pay these mortgage-backed security investors. But then there's an announcement that we can do forbearance.
Yeah.
So all of a sudden, these servicers now have this inkling that a lot of people are going to do forbearance, so they're not going to be receiving payments,
Mm-hmm.
and then they still have to make their payments. So a lot of them got extremely nervous and have fled the market. And this is mainly in regard to government loans, so your FHA, your VA loans. What that means to our clients is that the rates aren't as beautiful as they were, because the servicers are no longer there to help the lenders out with the pricing on these loans.
Right.
So the pass-through is happening. They're still fabulous rates, Jasmine. They're still gorgeous. They're just not quite what they were a month ago.
Yeah.
I do feel that once the market settles, we'll see some changes again.
Mm-hmm.
But that's kind of where everything's sitting. So rates have just been sitting in this nice little pocket. The Feds did a good job about a week ago by trying to steady those mortgage-backed security purchases, sell-off, etc. So we've seen a nice week where we weren't so volatile as we were a couple weeks ago. The Fed rate cut, something important that the news media never mentions. The Fed cut rate is actually a short-term rate. So that's the rate that the Feds give money to banks so they can borrow with each other. Has nothing to do with long-term rates. The long-term rates, which are mortgage rates, are strictly based off of the mortgage-backed securities, and then the long bonds and the yield, for instance, the 10-year yield sometimes has variance in that. When the Fed cuts their rate, it typically actually bumps up long-term rates initially, and then there's a trickle-down effect, because typically pre-COVID-19, that the investors get these warm, fuzzy feelings, Fed rate cut, so now these mortgage-backed securities, more people are pouring money into it, which helps our rates. But we have a perfect storm right now to where the mortgage-backed security investors are nervous about the economy, and with reason. Mm-hmm. But with the Fed stepping in regard to helping out with those, they're helping keeping those rates steady for us.
Nice. So really quickly, just what exactly are the rates that you're seeing right now? So I know like before, I mean, there were people getting like in the high twos, you know? So now where are we? Then you've been in the industry for so long, if you can kind of share some perspective of where are we now versus 10, 15, 20 years ago?
Okay, so I'm going to start back when I first got into the industry. So rates were still in the double digits.
Wow.
In the early 90s, it got to the point where we hit single digits, and I'm talking 9 7/8%. And it was the first refi boom that I was able to see. And you know what? People then were thankful to have a single digit interest rate, you know? And then we kept seeing it get better and better and better. And for a long time, they held in the sixes. I remember refinancing mine down to 6 1/4, thinking I was doing fantastic. And then they started dropping into the 4s, right? Remember? So what every once in a while we'll get those nice little valleys to where we can catch it low, but they're short-lived. So our clients have to be on the ball. They have to have the application done. We got to be able to lock them in to be able to do it, because it doesn't last forever. Not everyone's going to get the very lowest rate there is out there, unfortunately. But pricing is different on every loan. I almost think of it like a fingerprint, right? Because Fannie Mae, Freddie Mac, FHA, they all have these things that add on to discount points or detract from the discount points. And those discount points are what tells you what rate's going to do. They're related to each other. So loan to value, how much equity position do you have in the property, whether it's a purchase or refinance? What is your credit score? How big is your loan amount? What's the geographic location? All of those things come into play. Cash out refinance is going to definitely be more expensive than a purchase because it's a riskier loan because you're taking some equity out, right? So all these things come into play and they make up your interest rate. So some people, yesterday I locked somebody on an FHA at 3.25. A little bit of a discount on there, but 3.25. Some people, they're still in the mid fours, just depending on where their credit score sits. Somebody with an 800 credit score is going to definitely get a better rate than somebody with a 620.
Right.
But they're still phenomenal.
Right.
I mean, they're just really good rates.
Yeah, fours are, if you're kind of taking perspective of the whole picture, it's not bad at all.
No, not at all.
So how are like credit scores and, right now some people are losing their jobs or on furlough. And so how is that impacting if somebody is wanting to buy a home and that was their plan for 2020 and they haven't really started their search yet? What would you tell those people and what are the kind of qualifying factors there?
So definitely have to have employment at this point. I mean, when we did all the new regulation that came out after the last mortgage meltdown, that ability to repay is something that's huge. So we definitely need to document that they are currently on their job. In fact, we're to the point where it's now something new for all the lenders to really double check. We always do verbal verifications of employment, when we're doing docs, etc. We're now doing it within a certain hour period of funding just to make sure that hours haven't been cut or they haven't been furloughed, etc. But because I know this COVID-19 is something that's temporary, if you are planning on purchasing this year, even if you have been furloughed or your hours have been cut, let's talk. Let's get you guys on first base so where you know how to get to second base and have everything in line. Because like I mentioned before, if the rates are low or if that perfect house comes up, we want you ready. And the biggest thing in the file is your credit report. It's good for 4 months. So if it's something that we know this is temporary, we have you ready to go and your hours get bumped back up as soon as we're all going back to work. And we'll probably just need a paycheck stub to show that you're back up to your 40-hour week and everything's back to normal and we're off and running. You don't want to miss the boat. Don't let this scare you.
Exactly. And I think right now what we're telling buyers is like, we understand if you want to take your foot off the pedal, but let's kind of keep in touch and stay appraised of the market because as soon as everything's back to normal, we're going to go from our crazy market right now back to extremely crazy again, like we were like a month ago. So if we have buyers in escrow right now, what's happening with those buyers?
So most of them have been absolutely fine. I have to admit that, as much as every loan officer is concerned about good.
At least it's tea and not coffee.
That's right. See, it's a blessing in disguise.
Yeah.
So most of them have been fine. Like I said, the major thing that's coming down the pipe is just to make sure that hours haven't been cut, or if they have been laid off for now. But one thing I have done is because, for instance, we didn't even mention this earlier. So not only have the servicers with the government loans adjusted how they're working during this time, the non-conforming loans, which are your not agency loans, your jumbo loans, or maybe a bank statement program type of loan. Those have also suspended, not all of them, but a good majority of them have suspended doing business at this time. So my job to me is to make sure we have a plan B. So if we have a plan A when we go in at pre-qualification and something happens to where that product gets pulled, we have a plan B, and everybody knows that we have a plan B. So we're secure in knowing that we have a good foot forward on this. I think that every loan officer needs to have that at this point, just because, nobody's an oracle. We don't know what's going to happen.
Yeah.
So you just want to make sure that everybody has as much organized as possible.
Definitely. And then appraisals. So how are appraisals going for anyone that just got under contract and they have to get an appraisal done? Are you seeing that how different are they from when things are not like this?
So what came down the pipe is Fannie and Freddie came out with ways to modify how the appraisal is done. So with being careful about people that may have been exposed or that are in quarantine, etc. If they meet certain parameters, so Fannie Mae and Freddie Mac still know that they're secure in their insuring of the loan. They now are oftentimes letting us do an exterior only, meaning that the appraiser just needs to drive by the home and they don't have to come inside. Even to the point where we can do some desktop appraisal. So they just use the system to look up the price and are able to write up a report based on this desk review of the property. Even better is both Fannie and Freddie have databases that they've built to where when we run things through the automated underwriting system, oftentimes we get what's called a property inspection waiver or a collateral waiver, meaning that Fannie or Freddie can look at the neighborhood and know what the comps are doing and not even require us to get anything. They actually are accepting the value that we entered into the system. So that's really helping. And that's a lot of times, even on, I know we're talking mainly purchases, but refis, that's a nice little tool. And it saves everybody money on it too. So helpful. Oh, can I mention something really quick? Because I forgot to mention it. So if you have borrowers that have been pre-qualified for a loan, you want to make sure as a borrower that you go back to your loan officer and just check in on that pre-qualification just because of all the changes. For instance, somebody I might have had pre-qualified 2 weeks ago on an FHA with a 580 credit score might now require 620 credit score.
Okay.
So definitely have that in your mind to keep in touch with your loan officer. I know I reach out to my clients if I know a change has come so we can talk about it, and also their realtors so they know what's going on.
Yeah. That's good that you mentioned that, because there are those people that have that done already and they're just waiting to look for a home. Or put in an offer. So you touched upon refis, and so are those still happening?
They are, because rates are still great, right? So what I'm seeing people take the most advantage of is the equity position that they have in their home, because here in the Valley, we're doing really well statistically compared to the rest of the nation. So a lot of people will either shorten their term, which I highly recommend, because hitting that principal is something that we want to do. But on top of that, if they need some debt consolidation, this is a good time to do it. With the rates being so low, what they're paying on a car loan or a credit card is probably higher than the rate that they're going to get on a mortgage. And if we can even shorten the term on the mortgage, the amount that the immediate gratification, first of all, of a monthly savings is huge, but then I like to tell my clients to take that savings and start applying that towards principal even further, because the amount of total interest that's saved on a loan is huge. And that's a net gain. That's your retirement. That's your kids' college fund. Those are things that you can, it may not be such a tangible, immediate gratification, but it's a big deal. For instance, I'm refinancing myself down to a 15-year fix. I'm going to save over $80,000 over the life of my loan just by shortening up my term and applying what I'm saving towards my principal.
Yeah, that's amazing.
It's huge.
Yeah, that's a lot.
I got 2 boys to put through college, so yeah. And I want a nice savings for retirement.
Yeah, of course.
Those are things to think about.
Okay. And then so right now also in the news, there's a lot of things about like forbearance. And so a lot of people have a misconception about it, and they think that it's a forgiveness of mortgage. Can you kind of touch up on that? And then we could kind of put some math together also with that.
Absolutely. Okay, so forbearance isn't covered well by the media. So what's happening is, like you mentioned, there's a lot of misconceptions. So forbearance is not forgiveness. Forbearance isn't tacking it on to the back end of the loan. Forbearance is a delay in payments. So let's do easy math. Let's say that your mortgage payment is $1,000 and you're able to forbear 4 months worth of it. So that would be $4,000 of mortgage payments you didn't make for a 4-month period, right? Mm-hmm. What happens is once that forbearance period's up, that $4,000's due, and you still have your 5th mortgage payment that you need to make. So it is a balloon. The only way to get it structured differently is to speak to the servicer directly and find out exactly how they're structuring this forbearance. Because if it's not the balloon payment, it most likely is going to be a modification of the loan, not just a forbearance. So it's incredibly important to understand the stipulations, because I don't want anyone not to understand that all of a sudden this big payment is due, especially if they've been furloughed for the last 4 months. That's the last thing we need on their plate. So that's something to take into account. But also, Jasmine, your credit score. What's going to happen when you have this hole on your credit report of not having a mortgage payment reported? Mm-hmm. So that's something for you to consider before you think this is just a way to not make a mortgage payment for the next 3 or 4 months. That is really meant for people that are really in a tough spot, that can't make their mortgage payment. You know, nobody needs to be homeless at this point in time either. So that's why they're letting people do it. But for those people that can make it and scrape it, I highly suggest you guys do that to keep your credit score intact, not to have to worry about this balloon payment or trying to get it modified. I think everybody says we're going to be strong after this, and I think if we can just muddle through, that's the way to do it. But right. talk to your servicer and find out all the terms and conditions of it.
Yeah, absolutely. So tips for buyers that are looking right now and they need to get qualified, or just in the search. What kind of tips do you have besides? I mean, I know you kind of mentioned, like, if you're already qualified, then check in with your lender almost daily or every couple of days, because the news is changing day to day. But if someone wants to buy, and they're ready to go right now, what are you kind of telling them?
So we're still doing a ton of purchases right now because it's an opportunist time at this point, because all of a sudden, all these homes that we're getting multiple offers on, you can attest to this, are probably not seeing as many offers on it. So I think that the buyers have a bit of leg to stand on when making an offer in there. And as long as they fit in the boxes that we have, and the boxes that we have are still good boxes. They might be a little bit tighter on the government loans, but Fannie and Freddie still have 3% down products.
Yeah.
The down payment assistance products are still out there. So don't be scared to get pre-qualified. This is a good time to do it. We just make sure that we have you on one of the agencies. Again, if it's a little bit outside of the box, we have a plan B. Mm-hmm. But you do need to, why we go through the process. Absolutely. We check in, we communicate, we let you know if there's anything. I usually hear grumblings before a change happens. So we usually have a few days to hop on it.
Okay.
So I think that getting the pre-qualification is a great idea. Credit report's good for 4 months.
Yeah.
So even if you don't want to look this month, let's get you onto first base. Let's find out where we're going on second base, and if we can round third, and when we expect to be able to do that for you. And especially if I can help with the credit score. What if we can look at the credit now, and maybe you're not hot to buy in the next 2 or 3 weeks, kind of want to see what's going on in the news, but you want to be the first one out the gate?
Mm-hmm.
Maybe we can look at getting your credit score up 20 points and getting you a better rate.
That's true. Yeah, this is a great time to be working on that if we have the time, and a lot of people do have that time right now.
A lot of people are ready to make an offer now. I mean, if they just don't know because they haven't done the pre-qualification process, but they should. Yeah. There's lots of people that can probably qualify just fine right now.
Yeah, I think that first portion, I mean, as a buyer, 5 years ago now, that first portion's always the scariest for first-time buyers, especially. It's like all of these things like that lender needs, but once that's over, like it's like easy pickings, right? Like that's just the hardest part.
That's funny. Okay, so I always tease that I have the hard part for the borrower because I'm asking for everything, and I do ask for it up front. And the reason being is I just want to make sure we hit everything perfect. Because once I make you sit in your home office for a whole 5 or 10 minutes and upload your items, you're pretty much done. Exactly. And you can enjoy looking for a house. You can enjoy only having to worry about the home inspection or what tile you're going to put in the house because you've already done the hard part. And the hard part really is only 5 to 10 minutes. Yeah. It's just a matter of sitting down and doing it.
Yeah. I mean, for somebody like me, as soon as I hear, it's just like forms or like papers. I just like, but it's only it took us like hour to collect everything, maybe if that.
Yeah, right.
Yeah.
Well, and so, for instance, Bay Equity, we have a portal and you just browse, click, upload, upload. It's not hard. And it's Fannie Mae, Fannie Mae even has a program called Day One Certainty. And I utilize that on every file that I possibly can. Where we can pull in assets so you don't even have to bring in bank statements. We can pull in income. I don't need a W-2 or a pay stub.
Yeah.
So all of a sudden it's a driver's license, one other form of ID, and you're done.
Right. Yeah.
So we're making it as easy as we can.
So I tell buyers right now, like it is so much easier than it was like before. And so one more thing is kind of the outlook of the market. And I've been following the Cromford report pretty much weekly right now because everything's been changing. And so Tina Tambor always does a great analysis of everything that's going on, especially in our Phoenix market. And I know it's kind of weird because what we see on the news is not reflective of Phoenix and Arizona at all. And so how do you take that information and then, your experience from 2008 and then do a comparison locally? And how do we stand right now compared to 10 years ago?
So 2008 is a whole different ballgame than what we're seeing now. Both are absolutely affecting lending, right? But two completely different circumstances. So 2008 was because of the lack of regulation. I think that the appraised values were pushed and pushed and pushed, and we saw this
false bottom, right?
Yeah, we had this crazy appreciation rate. So when it popped, like the meter just fell right down. When the new regulation came out after that, it removes the loan officer from the appraisers. We can't have any contact with them. There's a lot of different things that have to occur. Appraisals are done on rotation now. There's all these safeguards in place. So since then, these appraisers are reviewed by underwriting. They're obviously appraised by reviewed by their authority. So they have been, in my opinion, really good appraisals because they're using comps that are correct. They're not overinflating values. They're using the actual appreciation rate of that neighborhood. So we've had just a steady appreciation rate. But to boot, Jasmine, Phoenix was #1 hottest market in the nation because we have so many people moving here because we do have so many job opportunities, right? So with the influx of people coming in, my opinion is that we're still going to be just as busy because we did the appreciation rates correctly. And we have such an influx of people that I think sellers and buyers are always going to be buying and selling here in Arizona just because it's a really good market.
I agree. Yeah. So that's kind of all the questions that I have for you. Do you have anything you
That's
want to
it?
add? Yeah, that's it.
That's it. No, that was fun.
Okay.
I appreciate you having me on.
Yeah, absolutely. So we will be, I'll touch base with you maybe in a couple weeks again because, like you said, there's so many changes happening. And I've been noticing in the news also that every day is a different day, right? And so we're just taking it day by day in our industry and just wanting to keep people up to date locally, especially is my thing, because definitely what you're seeing in the mainstream media does not always apply to our local market. And that's my biggest concern is that people, especially my clients locally, my friends and family locally, that we stay up to date with information regarding the lending in the markets here.
Yeah, and it does. It takes, the media is obviously on different topics, and it usually takes a while for them to bring up what the local things are, and that's with every community, right? With real estate, it's a slow moving market. It's not the stock market where you can just buy and sell and buy and sell. The real estate market is steady. That's why everybody says to invest in it, just because it is such a slow moving beast that goes through. So I think we're going to do great. I think the media will hop on it as soon as we start muddling through this COVID-19. Most people I know are having a really positive outlook and looking on the bright side of what this has done for us. And one of the things we can look forward to is having a nice run when everybody's ready to really rumble. But it is still a great time to do everything right now.
I agree. So this was cool. I'm going to finish my tea, hopefully not spill more on myself. It's this mug, like it's so big but cute and I love it, but the lip is like, and it's a heavy mug, so it just I will
But
see.
yeah, let's touch base in a couple weeks. There are days where I'll get 4 announcements just back to back with changes. So I'm sure there's going to be some new stuff coming out. So I'd love to update you all, and just holler if you guys have any questions.
Definitely. Thank you.
You
Have a
got
good
it.